The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 26th day of December. Just a couple of days left and we wrap up 2018. Dow's up 371 at 22,163. Now this is going to be really interesting because everything that I did since last Friday going into Monday's really vicious downturn said to me, as I was working through charts, even yesterday, even after the close on Monday, the 1 o'clock close, early close, that under every other circumstance, this should be a low, maybe not the low, but it is a tradable low. And the big thing about it, there were two aspects in this morning when I sent out my opening call, my daily newsletter. It was really difficult for me because earlier in the morning, actually last night even, and going into this morning, the futures were up a little bit, and I was quite prepared for that. I thought, great. But as I was writing and wanting to send out my newsletter, the futures had another big spike to the upside. That's really upsetting. I didn't really want to buy a gap up, a big gap up. So what I did is I said to subscribers, I like what I see. We're going to get a position we're going to get a position either at the open or right the moment you get the newsletter. And then we're going to get a position for a pullback because there should be some kind of I would like to see even a scary pullback. Together with that on the same index, we got 3 times long. So it was very interesting and upsetting because the 3 times long one turned out to make us money, and the ones that I was very careful in preparing just got taken out. So overall, it's a kind of a break-even trade, although I've had a number of messages, a number of emails to say, we like that analysis, we stuck with the analysis, and we stayed long, even though it would have taken us out by just a couple of pennies. We're in. Thank you. I like that. I wish I had an update today. I should have said, if we're taking out, I'll give an update. I don't do that. We've already had the newsletter. It's out. I have to wait all day. This market could be, instead of 385 points up, we could actually get back almost all the gains of Monday, which in a sense was a bit of an aberration. But today we made a lower low. The low on Monday in the Dow was 21,792. 21,800 really was one of my key levels to watch on the downside if 23,300 was taken out. Well, this morning, we went down even a tad low. We went to 21,712. Let me just put that in here, 21,712. And now we're trading at 22,184. I think that 22,300 level should be a target. My thinking was there should be a rally into Thursday. Today's Wednesday. Into Thursday. Probably Friday we'll get another one of those sudden sell-offs. But the higher we can go right now, the greater the chance that the low of yesterday or Monday or today, in this case today, that should hold. And if I was looking at I can't even tell you how many stocks I was looking at, I said, are you telling me that after 30 or 50% decline in some of these stocks, they aren't really ready to form some kind of a trading bounce? I think so. I don't want to be sanguine. I don't want to be overly optimistic. I'm looking at this as an extremely oversold condition. I'm looking at the monthly as being an extremely unusual in monthly charts to see this cup formation take out the low. It hasn't gone to a one-to-one to the downside, which takes it into the low 21,000s. But at this particular point, everything about the daily with the stochastic now at 3.9%. This morning, earlier on, it was at about 2%. One of them, I can't remember which one it was at 1%. Oh, that was the 120-minute chart. So I think that this is really an opportune moment for a trader. I just don't see any reason why any other shoe that drops right now should be ignored quite quickly, because absolutely there are, I wouldn't call them bargains, because a bargain means that you're getting an opportunity to buy something at a rare discount. We don't know that. I can't say to you that. I mean, what if we in 2 weeks' time? What if we're down at 21,100? This wouldn't have been a bargain at all. But in the near term, yes, I think there's a bit of a sale going on, and I think that you can play this rally. Dow's up 424. S&P, so the Dow is up 1.9%. The S&P is up 2.17 at 2402, up 51 points. Made a low. Now, this is going to be very interesting. Look, the low yesterday, Monday, was 2351.10. Today it went to, unbelievable. Today it went to 2346.58. On that second decline, I bet people that gone in just got, that was it. They must have thrown up their hands. And that's why I think that today could see a fabulous turn to the upside. We went under the 200-period moving average in the S&P weekly chart. How often does that happen? I mean, give me a break. What a move. Look at this. The last time was back in 2000. Last time was the week of the 11th. Well, first of all, it was the week of January the 22nd, 2016, and then February, the week of the February 11th, 2016, at 1812, and then a lower low at 1810. Huh. How about that? And we just hit the 200-period moving average. I don't know if it's going to have the same effect, but believe me, if ever there was an opportunity to bounce, today has to be the day that it takes that opportunity. And the S&P needs to close, not just get over. It needs to close above 24.1034. That's another 5 points or so. And that would be a really great turnaround from Monday's low. QQQ, I'm doing this a little slowly. We're going QQQs didn't even go to the low of on Monday. Let me just type that in here. That is the low of 140. Ooh, we've got a slow. That's very interesting. First time in a while we've gone slow. Okay, that's 143.46. Let me just put that in here. 143.46, 143.46, cancel, lower it down here, and I'll show you right here. So the stochastic went to, now it's at 5%. It was lower than that on Friday. Now this is going to be unusual because this is a leg C to the downside. Unusual that it should go to a C. It was a G/C, but alternate count makes it a C. There's nothing else you can do. So what I want to see here is that by Thursday afternoon, the Qs are trading at 150. They're at 148.44 right now, up 3.46%, even better than the others. And I want to see this trading at 150.90 by Thursday. Oh, that'll be great. Oh, we're up 504. Wow, what a nice move. IWM right now is trading at, it is up 2.38%, up 299 to 128.85. Ah, man, this is still the laggard in terms of price, but today is a very good turnaround. Tough D is being made. Stochastics now at 3.58 after being lower on Monday. What an ugly monthly chart. But we want to see the IWM move. We'll talk about gold and dollars.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Fact checker, my governor of the Chapman Wave in the den, reminded me to check something out, and I completely forgot in the QQQ that it was there was a new sell mode, and that it was a leg D to the downside at 143.46 on Monday. Now it's a trough D if there's no new low. I had already done that when I was looking at the Qs. I thought I corrected that in the when I was looking at the NQ, the continuous contract. I had a G/C, so this made this a leg D. It was inside that. You couldn't see it because it was inside the candle. So thank you for reminding me about that. And I'll lower this down. You'll see that it was an E in the weekly chart. So I don't see any reason why there shouldn't at least be a trading bounce. And then we'll see. I've got a whole bunch of things to discuss about that, but we're going to go one step at a time. Here's something else I just wanted to show you in the E-mini. Yeah, so we've just made a D in the 2-minute chart of the E-mini S&P. Can you believe? Look at this. Just at 11 o'clock, just on 11 o'clock, the E-mini had, S&P E-mini March had gone to 2345.50. An hour and a little bit later, it's trading at 2410.75. And look at this, a single leg A. It needs a little bit of a breather, but this is great action. Single leg A in the 10-minute chart. All right, just wanted to show you that because a lot of people ask me about these short-term intraday moves. Now, let's do this. I want to show you something that I think is going to be important over the next, not the next couple of days, in the next month. A month from today, in other words, give it the whole of January. You see, gold has gone up 2.9. It was much higher earlier on. It was at 1282.3. Way above the 200-period moving average and 9-period moving average and the 14-period moving averages that I was talking about around about the 1258 to 1261 area. But if you look at the up channel, do you see the resistance here? Let me make that red. I'm going to make that red. And then I'm going to follow it up with a little bit of a, there you are, make that green to that level there. And what I will say to you is this. If in the next month, gold is trading Remember how I used the 200-period exponential moving average when gold was at about 1246? I said moves to the 1258-ish area and then closes above that. I think we're going to go higher, then we can come back and then maybe go higher. The higher we go, the greater the chances are that 1258 becomes a very serious support level, meaning that it can go down even to the 1242 level, but it'll keep coming back because you've started the insignia, that sine wave yo-yo formation that's going to go up and down, crossing the 200-period moving average in the daily. However, if there is now a move into the 1292 area over the coming couple of weeks, could be in a day, but I'm saying over the couple of weeks, that kind of holds well. You've not only broken the up channel resistance in the very small weekly up high highs and higher lows up channel, but now the 200-period moving average of the weekly chart at 1304 is going to become active. And not only that, in the monthly chart, finally, you've crossed the 9-period moving average. Now you've also crossed the 14-period moving average, 1257, and now 1275, the 14-period moving average for December. So this is really important. It makes January very important for gold, and silver has just finally popped to the upside. It cannot hold. Yes, holding now at 15.17. Remember I said anything into the 1520s, and I'm very impressed if it can hold there. That's a very good breakout. Today's high so far is 15.25. Days young. Let's see if they can hold even better. Then it too is going to go at 2 silver. Is going to go to 15.47, the 200-period moving average. So this is a really important moment. Why am I making a big deal? Because the dollar has, dollar right now is down 2 cents, struggling at the resistance level of the 14 and the 9-period exponential moving average in the daily chart, having made a peak F in a kind of a cup formation at 97.71, 2 pennies above the 12th of November's high. This is the 14th of December, a month later, and it's pulled back. And that weekly chart is still holding well, but the technicals are starting to dip. The stochastics at 82%. Then that's very important. So we've taken a little bit of profit now in our big trade since April the 4th, April the 6th. At 90.07, it hit 97.71. We took profits at just under 97, 96.50s or something like that. And now at 96.61, what was it profit? 96. I forgot to type that in. I'll tell you right now, because if we're going to go apples for apples, I need to make sure. Yeah, in the UUP, 25.82, 2.19, 8.8% profit we took on a certain position, a very small position. I like the monthly chart, and so far it's holding well. So let's just keep that in mind. Nothing to do here. I think the upside is very limited. The downside should make lower lows, slightly lower lows. Maybe there'll be a big spike to the downside, but so far it's holding very well. A close below 95.80. And you've got something completely different in the chart formations, and you've made a peak D already in the weekly chart. I'm anticipating that the dollar has a bit of a pullback. Will that help the market? In a way, it'll help. What is Johnson & Johnson doing here? Johnson & Johnson's struggling up 81 cents. It's gone from the about 149 down to the 121 area. I'd say that's a pretty big decline. We'll see if the dollar is going. I think the dollar is international buying. That's really what it is, and I think that's going to stay. I think as long as there's uncertainty, dollar more than gold has been the place to be. Maybe it'll change, but we'll have to let that unfold as the days go on. So in a week's time, in a month's time, if the dollar is under 96, it should be. But if it is, that says time out. Let's see if it helps the market. I think I think we're looking at 3 completely separate things. We're looking at gold as a fear trade. We're looking at dollar as international markets, that is countries internationally have been buying the dollar for security. They can say whatever they want about the president. They're still buying the dollar because it's been the strongest currency. And the other thing that I'm looking at here is that in terms of, I don't want to get into it now. I'm just going to mention it in passing. In terms of the markets, this serious decline in December in the monthly chart has the potential, especially if you're looking at the one-to-one and the weekly chart, to have the most damage done till this morning, the low that was made this morning, or in the Q's case, until Monday. Now there's a counter trend bounce, and the biggest thing for me is how low will we go if there is another leg down, and when will it come? Because that is going to be absolutely telling in terms of my mega quota phase that I still think is active. Should we be participating in later this? I'll be back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN has launched our best sale of the year. The Tiger Dollar End of Year Sale runs through December 31st only. And right now you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, so I had two emails here. One said, Paul wants to know, all three major market averages are looking at the death cross on the 50 and 200 DMA. Could you talk about margin debt today on your show? So the death cross, you asked me for two things that are really not in my purview. This is, I've looked at the death cross over the years, and it's failed more times than I could even imagine. So when it's going to work, great. I just don't know. I'm looking at other things. I'm looking at time is now needed. It isn't so much price anymore, it's time. And that's going to be really important for me. That's number one. And then I got one from GT, always sends me just really informative emails. And he says, call for new highs? Insanity. Based on what? Dow trading like it is 2008 global growth slowdown. All of which I agree 100%. At this particular point, to even think of a new high in the Dow would take a lot of imagination, because you'd have to change this chart dramatically. Let's just go back to the Dow right here. However, there are patterns that I look at, and I look at in great detail. I trade them all the time, these particular patterns all the time. And it doesn't matter to me whether this is a monthly chart or whether it's a 2-minute chart. Patterns are fractals of human emotion. And my suspicion is that at some point over the next, I'd say 4 to 6 weeks, I will know a tremendous amount about the speed of this decline. I don't think I met anyone over the last 2 weeks that didn't, even people who just never talk about the stock market. In fact, I didn't even know they follow the stock market. Once they knew either what I did or just knew that I did it, but hadn't actually spoken to me about the market, had mentioned, and I will know much more on the 1st of January when I see a lot of people that I don't see more than once a year, maybe twice a year, because that's going to be a big thing for me. But up until now, every single person said they're really worried about their IRAs, their savings, et cetera, et cetera. This is the exact opposite of what happened last year, exactly this time in the Bitcoin market. I mean, everyone was talking about it and making, these claims that they'd made fortunes and it was going to 40 and 60,000. So all I can say is that in a sentiment way, I need time. Now we've done a chunk of price. I wouldn't be surprised if, yes, we do go down to the low 21th. I wouldn't even be surprised if at some point there's this crazy sell-off that is just a conflagration between the two parties that just lands up being horrendous, and that we just cascade lower. That's a possibility. The lower we go, the longer it takes to start to move up. Then if you start to move up, to do it during the presidency, the Trump presidency, it would be like one of those crash of 1987 where I said within 18 months we make all-time highs. I haven't got to that point yet at all. I don't know if I can say that within 18 months, new all-time highs. All I can say is that at some point over the next 2 years, if we take out 26,951 in the Dow, we're going a lot higher. If we take out 19,000, I have to set aside things and say, you know what, maybe I'm wrong. Looking at these charts, some stocks and some indexes absolutely have to take more time. This is not good enough just to take a few months to come down, even if it's very sharply. They need a little more digesting. That could be what I talk about, the October and March relationship in the stock market historically, where sometimes you've seen an index bottom in October, and then in the March low, the residual low that comes 6 months later, sometimes it goes to a new low and sometimes it doesn't. It's on its way to new highs. And sometimes the index that made a low in, then it didn't make the low in October when the other one did, then makes the low in March, then it has to start. So in other words, the low is 6 months later. So all I can say is that I'm not a mega bull as far as right now is concerned, but I don't believe that there won't be a phase that says it's going to take in all the markets around the world. People will be coming to trade American stocks, and it's just going to be a United States mega move. I'm still convinced that that'll come about. I don't know when. I just don't know when. I do believe it'll be in the next couple of years. And I just don't know, because we need to get some established low. You can't get a low. You can't even talk about highs until you get lows that are really. The reason why I don't think this is the low is if today saw a rally, even if today at 449, we closed down 449 and 500, and then Thursday or Friday, we make this incredible turn where the VIX just collapses intraday and the market has this 1,000-point upturn and closes 500 points higher. That would be spectacular. But let's just do one thing at a time. I love the low that was made today so far. Let's just see how it goes. If this market holds really well into 3 o'clock, there are going to be people forced into the market who actually start to get short on that second dip in the morning. All right, enough with that. Let's go to the TLT. Here's another clue. The TLT is pulling back a little bit down 46. It made a peak G/C at 122.03 4 days ago. I suspect hitting 200-period moving average in the weekly. Remember, I said to subscribers to my opening call, don't forget you've got a fantastic sale going on right now. Goes through to the end of the month. Take advantage of it, and this is really an opportune time. So the TLT would say to me, if it starts to pull back here and can get back under, I don't know about going to 118.44, the 200-period moving average daily, but it's right at, I said 121 to 122 is going to be really strong resistance. Let's see how it breaks out or breaks down. So I'm watching the TLT closely. I'm watching crude oil, CLC. Hey, nice move in crude oil, up 2.91, up 6.84% today. Hey, that's good. Now, the other thing that I didn't look at is EUR/USD, euro, the euro-dollar currency pair euro's pulling back, 1.137, got you a peak D 5 days ago. Yep, 6 days ago. And look at the weekly and monthly charts in the euro look horrible. USD, JPY, that's why I think the gold move now has been a fear factor and not a currency-related factor. USD, the yen is running really nicely. It hit 110, 109.99. Well, call it 110. On Monday, now it's trading at 110.86. I like it. It hit the 200, almost hit the 200-period moving average. It's going back into the rectangle formation. This is really an important moment. Let me just see if the dollar's even running a little bit here. That's unchanged. All right, so I'm going to be watching the dollar very closely. I have to tell you something. If the dollar goes to 97.60 in the next 2 weeks and holds there, that'll just be so impressive. And I'll be convinced that this is huge national markets, countries that are buying the dollar because they are afraid of their own currencies and they see America still the strongest economy in the world. All right, we'll be back straight after this. I think I've covered everything I needed to cover. I want to cover a couple of things like SMHs, semiconductors, etc. Semis are up 1.8, up 2.29%, at 82.81. I'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, so the question came, a couple of questions came in. So first of all, semiconductors traded right to exactly to the 200 period exponential moving average in the weekly chart. Nice little doji candle forming here. It needs a good bounce, and then weekly, the monthly has gone from 114.55 to today's low of 80.71, 30 points. Hey, you tell me that's not a big decline, and there's more to come, I think, in the semiconductor index. A couple of questions. So, Paul, I'm sorry, I forgot to answer the second part of your question. Could you talk about margin debt today on your show? You know, I look at charts of margin debt, and it's really scary. I do not like the look of margin. I don't like debt like that. I just think it's a terrible, terrible thing. But as I've looked at it over the years, I've come to the conclusion that it impacts markets late in the cycle. It becomes just yet another thing. So I'm sitting at a side and saying, I don't like it. I've seen the margin debt. I haven't looked at the chart of the most recent, just exactly where we are. I know that it increased, but I just don't, I haven't got a picture in my mind of it. I'll try to do it for tomorrow, maybe by Friday, I'll try to get to it. It's not my area of expertise other than to say, I do follow it, and I know exactly what you're talking about, and we'll pay a penalty if that continues to grow. But at this particular point, there are ways of ameliorating it in the intermediate to short term. It's the big picture that really makes it important. So you want to see the SMHs right now at 82, 81. You want to see them by Monday to Tuesday of next week. Tuesday's the first, so Monday of next week. Somewhere in the 84.50 to the 85.10 area. If it can do that, I'm not sure it can, but that would be great. Next thing I want to look at is in terms of Goldman Sachs. Yeah, Goldman Sachs, right, let me look at the time. Yeah, Goldman Sachs is having a little bit of a bounce up $1.61. Ooh, $1.61 in the daily chart. A lot of work. It just really, it's 275 to today's low of 151. 120 points in a $275 stock, gets cut by a third. It hits the monthly 200 period exponential moving average, takes it out. This is, to me, a big issue. But I think it's also partly because they have other issues. They have scandals and things that are sitting there. Yeah, for instance, Bank of America, this is at 1.08. I think, yeah, Bank of America is at 3.45. So it's trading at 23.52. So, yeah, it depends on what you're looking at. At TU, I think it is, I hope I'm correct, the 2-year Treasury note question here is it went to peak CDE. If this is an F right now, if I'm just really strict about it, DE, no, it's not, it's a G. A, B, C, D, E, F/A, G/B. Okay, just calling it a G for now. I don't need to change anything. We'll see what happens. Single leg A to the upside, incredible. Goes from 105 to 105, 106.03, 3 ticks. I mean, that's huge for a 2-year note. Yeah, that's big. What's it actually called? It's called U.S. Treasury Note Continuous Contract. So I hope I answered that question. I yield to the yields. That's all there is to it. Let's see what happens. Next question I had was the VIX. Let's have a look at the VIX right now. The VIX is down 3.37 at 32.70, down almost 10%. Hit a peak leg F to the upside at a high of 36.20. Oh, it's down almost 4 points from the high. Look at the MACD and stochastic, very strong, daily, weekly, even the monthly participated in a leg B. Let's see where it closes on December the 31st. But this VIX is also going to be really important. If it has a whopper of a pullback, if it just goes down a little bit each day in disbelief, in a way that's bullish, but it's also saying at any point you can get another one of those slides in the market. But if it just takes a real dive to the downside, next thing you know, it's trading at 28 and then 26 by Friday or Monday. That's going to be really important. All right, enough getting carried away here. Remember, on Friday during the show, we were down like 300 something points and 400. Boom, next thing you know, you're way down. So anything can happen here. Today we're on the upside. First green candle we've had in a long time, and a beauty. Now I wanted to do, XLK. The XLK is the S&P Select Tech Fund, Spider Fund. It's having a really good day, up 3% at 59.37. But look at this. It gets taken to the cleans. It goes from the 76s back in October to yesterday's, Monday's low of 50s, what was that? In the 57s. So you tell me, 77 to 57, 20 points in a $70-something stock. There again, it's just, hey, how can you not get a rally from this unless the news is just so bad that nobody's even interested in buying? So this is A, B, C. This is a D in the daily. All right, alternate count daily. Yeah, I like what we're seeing right now. I didn't like it an hour and a half ago because that pullback was, I didn't like it because that was the, going towards the stops, but now it's looking very good. So XLU is going to be very important. XLU is trading right now, wow, down 0.04 at 51.51. That's quite a decline in just 2 weeks, 3 weeks, let's say. It's gone from the 57s to today's low of 50. 7 points in a $57 stock. That's a big move, 12, 13%. Hey, this is going to be, there's that U-shaped pattern. So if yields are going to go higher because bonds and MKTX, I think I'm right. Yeah, MKTX, this was a stock that I showed subscribers the other day. I said, we've got to keep our eye on this. Market access, holding, capital markets, fixed income, electronic platform, makes a U-shaped pattern, double top, G/A, right at 229.84 was the high in March, plummets down to 172, spirals back to just a slightly higher high. 229.84 goes to 231.33, and now it's trading at 201. 30-point decline. That's serious stuff in the yield sector. All right, so I just wanted to go through all those things, but most importantly, what I wanted to say is that it is the longer term that is going to be really, really important. Now, we've seen that every single spike to the upside, every single one last week got sold off. Every single one. Look at this. Now, let's go to the ESH 19. Look at this. In fact, it's not just last week, it's for 10 days. 1, 2, 3, 4, 5, 6, 7, 8. For 8 continuous sessions, there were just ugly red candles, or red candles, big red candles. And now there's the first green candle. I'm not so sure that we're going to sell it right away. Oh yeah, the E-mini just failed. The E-mini, let me just check that out. The E-mini went to an E in the 5-minute chart. It's only a B in the 10-minute. I don't know. We'll see.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Everyone, last segment, let's go to Kevin in Sacramento. Hi, Kevin. How are you?
Good, Basil. How are you doing?
Very well, thank you. You'd like to look at?
Workday.
Okay. Do you have a position?
No, I don't. What I was looking at, Basil, was just because the option premiums are so high, I was going to sell some way out of the money puts and just kind of essentially scalp a little bit of money on it. I was just wondering if you thought there was any chance for a 25 point downturn in this thing anytime soon.
You know, I do think that there is. It's one of the best looking stocks out there that I look at. I have a note to myself to keep this in mind. The monthly chart is really strong. Weekly chart made a peaky, pulled back very strongly from the 170s down to the low yesterday, or down to the 141 area. I think it's got a little bit more to go. I would probably be looking more at the call side for just a little bit more of a bounce to get those maybe 8 extra or 9 or 10 points on the upside, and then I'd be looking at the other side. So if you're looking for it to turn down. I would just have a little patience. Let's see how it can, if it's even able to get to, it's at 151, if it's able to get to the 157 to 158 area, how it holds there is going to be key, and I'll probably look at it again over the next couple of days. Meantime, on the short term, I think it has more upside than downside, so I wouldn't be doing anything on the downside yet. But upside, I do think that it has a chance.
Basil,
Yep.
I wasn't talking about doing anything on the downside. I was actually going to sell puts rather than buy puts.
You're going to sell. I'm sorry, you're going to sell. Yeah, if you're selling puts, as long as you can monitor it, I'm with you. But you've got to be able to monitor it, and you've got to handle it in such a way that if there is a sudden turn down, it's just got 8 points to the upside. You can give that. Yeah, I can give that back quickly. I like it. I think it's got some upside. Yeah.
Yeah, I was thinking about, do you think any threat of 125 in the next couple of weeks?
125 in the next couple of weeks?
Yes.
No, I think 137 is more likely in the next couple of weeks. But at this point, I want to see what the upside does. Hope that helps you. I'll talk more about it tomorrow. Thanks for being here. Stay tuned for Steve, and I'll be back tomorrow. Check out my opening call.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.